Welcome, everybody. Welcome back. This is Fausto from Cyber Trade University, and I have a wonderful guest, old friend of mine, probably known him for, I don't know, maybe 2-3 decades probably right
Yeah.
now, probably forever. Jeff Hirsch from the Traders Almanac. Jeff, how you been, man? You look great.
Thank you, bro. I've been great. Been
How you
taking care
been?
of myself.
Good. That's good. That's good. What have you been up to?
Hiking, working out, eating well.
You sure looked a little different.
Down about 60
Looks
pounds.
like you
man.
lost a little pounds, couple of pounds there. I think you know what happened. I think once you break 50, not only does everything fall apart in your body, but like I've been going in and out of doctors, and I don't, not get too crazy about it, but it's just you got to change, and start seeing people getting sick and stuff.
Crap away your entire life,
I know, and it's just so uncomfortable. That's good. That's good.
I know we both like good food and good drinks, so you gotta reel it in.
I know. Actually, I was just telling my traders in the room. I said, I said, I got to talk to Jeff and tell him a little about some, see what he's been. We're talking a little bit about food, some restaurants. We got definitely a lot in common. You know what I mean?
Sure.
You could always have a good conversation when you have.
I can tell you what we made last night, man. I made strip steaks and baked scallops.
No carbs.
No carbs.
Oh,
lots of butter.
Last night I have a home living channel too, and I have like a whole bunch of recipes and stuff on. Yeah, it's one of the hobbies as a trader. I mean, what else are you supposed to do? You trade, and you need a little therapy. So I had backyard chickens, and I garden, I cook.
Oh,
but
nice.
Yesterday, yeah. So yesterday I made I hadn't made in a while, but I made some. One of my friends imports a lot of shrimp, so he gave me a case, and I made some shrimp scampi with some pasta on it. And I haven't made in a while, but damn, it came out so good. I love it. It's delicious.
I find it cathartic as well, man.
So Jeff, anyway, so getting back to trading and everything. So it's just good to see you on here. I know you've been doing this for such a long time, and the listeners here really want to get to know a little bit about the Almanac and everything you've done. You have a very unique strategy behind trading and how you look at the market and how the Almanac really works with your book. But tell me a little bit about your background. How did you get started with the Traders Almanac? What is the Almanac? Let the listeners here understand. What are we looking at here?
I mean, I was born into it, man. My father started it back in the 60s. So he was at a place called the Indicator Digest out of Palisades Park, New Jersey, running the operations there for my our cousin Sam Kozla, who started it, famous songwriter. And after a few years, Yale had the epiphany to take all the markets, cycles, patterns, trends, seasonal strategies, and put them all together in a calendar format so he could follow the market schedule along with his own. Came out with the first 68 edition in the fall of 67. All the brokers ate it up. I mean, back in the days when you used to call them stockbrokers, now they're advisors. But and that was the core of the business in the beginning, was selling almanacs to brokers who would give them to their clients as holiday gifts, put their name or number on it. And so basically, I was born, bred, weaned, raised on cycles, patterns, seasonality. Dad invented the Santa Claus rally, came up with the phrase. He was a songwriter, if Santa Claus should fail to call, bears may come to Broad and Wall. He created the January barometer, both of those in 72. The best 6-month switching strategy. A lot of people talk about sell in May. Well, he invented this 6-month switching strategy, November to April versus May to October in 86. I say forget sell in May. You got to buy in October and get your portfolio sober, which has worked like a charm the last several years. And nothing's perfect, 100%, but it's worked very well. And it's one of the most proven black box systems out there. So I grew up with it, man. I was shipping books out of the mailroom as a kid. Running numbers. I have this little ruler here that I still keep, that I used to go down the Barron's Lab pages with a red pen, underline uptick, half-hour upticks, and doing it on an adding machine with graph paper. One of the things where I think you and I sort of have this connection is the time of day to trade. I mean, I had your mouse pad for a while, where it shows that you
don't have it anymore. I got to get you another one.
You know what? It got a little too much sweat on it, so I had to move it off. So I use it.
You wore it out.
I wore it out, but it's the same as the page, in the Almanac of the half-hourly trading, which is where I cut my teeth doing research. So after college and screwing around for a bunch of years, my buddy said to me, he said, Jeff, what are you doing, man? Go work for your father. So I did. And about 1990, I started full time. And here we are, 58th edition is out on the street. But the real core of what we do is the newsletter, the at stocktradersalmanac.com, where we take all that knowledge and information in the almanac and put it, turn it into wisdom and put it into portfolio. So I do stock screens, sector rotations with seasonality, as well as fundamentals and technicals. We use the MACD to get into the best and worst months with timing signals. And, a lot of pros, a lot of self-directed investors are subscribers, and, they continue to come back and stick around. I mean, it's really encouraging to see the sort of reception. I was just down at one of the money shows. I know you've been down at a few of those, and the room was full. People were, engaged, and the post-election year patterns, it definitely got people interested, which is, a whole other thought process. That's a sort of more macro overarching pattern we're looking at. But right here, we're in seasonality season. We got Santa coming to town. We got the January barometer. We got a January indicator trifecta. We got the January effect, the small caps starting to outperform in mid-December, which is kind of happens early. So, that's kind of a little overview of where I'm at and where I came from.
Yeah, I'll be telling you, I'm glad it's funny you brought that up, that you were down at the money show. I was up there in Toronto. I'll tell you, I've seen a huge comeback. Listen, the Trump rally, I don't tell anyone you like it or not. Listen, you and I been through, I don't know how many presidencies, and I always tell everyone it's always good to have a new president to come in, because it just totally changed the landscape of certain stocks, certain rules, whatever it is, and certain stocks are rally. But let me tell you, I've been doing this for a long time. I don't think I've ever seen a presidential rally as big as this one. Just like AI stocks, everything,
Bitcoin.
Crypto stocks, all of them. But yeah, like you said, you've been down there and you've seen it. I mean, I've seen a really big comeback of people starting to get in. But
yeah.
In your situation, I know doing this for so many years. Do you think it's still too late to get in it? I mean, what do you see where people should be paying attention to?
I think this early December dip is a perfect opportunity. It really sets up with the seasonal patterns. There's a lot of weakness in beginning of December with tax law selling. I get in with our buy signal, but some of our stocks are getting, that we picked in our basket from our fundamental screen, are getting banged around a little bit here with this chop. So I think this is an opportunity here. You got to pick your buy points, your limits. You got to use your technicals. But I don't think it's too late. I see, we had that big November. I think part of the reason we had that big not post-election year, but right after this rally, had to do with the clarity and decisiveness and quickness of the decision. I think a lot of people, myself included, were concerned that we were going to have something drawn out and it was going to be a lot of uncertainty in the market was going to be upside. The market celebrated as much as the new administration and the new, business-friendly rules, the fact that we had a decision quickly, the event was over, we can move on. I think that was a big factor. So I don't think it's too late. I think this is a great time to get in, but you're not chasing everything. We're looking for new opportunities. We've got a couple of sectors that are coming into play right now.
Which sectors do you like?
Copper and energy stocks and the explorers and producers, like the XES, XLE, copper, and
you don't think they're still too high to chase them?
No, I don't. I think they've come down quite a bit. I think there's a little bit of drill baby drill supply coming on into the front. That's pushed them down a little bit. I think it sets up seasonally. Looking at the charts here, I don't think they're too high right now. Granted, we have a little buy on dip, a little bit below the price that it was at, but I think we've come down to it. So they're looking attractive. This is a seasonal trade, not necessarily long term. This is like
right.
December to May, maybe even a bit less, and we'll tighten up our stops as it goes up if it does. But it looks set up for us seasonally. I don't think they're too high.
What's crazy, Jeff? I don't think people realize this, but President Trump's not even in office yet. You know what I mean? Like, he's not even in office, and just look how much the stock went up. If it was Tesla, Tesla just broke new highs, broke 400. I mean, like, and you see like Elon Musk, like, regardless of how much money he put into it, I think he made like $30 billion he's worth that went up, in the past month. And the ETFs, the TSLL and PLTR, all of them. I've been talking about PLTR forever. I own that stock forever. And I just keep buying more and more and more in the dips. I mean, there's just so much out there. But like, I think people have to understand that you're talking about, you said drill, baby, drill. And some people like that word. Some people don't like that word. He didn't even drill yet. You know what I mean? So
there's the perception that he's going to do that.
Right. The perceptions. And if he does do that, I don't think people, you got to read between the lines as a trader, you know, whatever he says, if you learn from the first administration, he does what he says he's going to do. I always tell everyone, if a politician only does 10% of what they say they're going to do, they did a great job.
Yeah.
He did a hell of a lot more. And I think when it comes down to it, if he does even 50% what he says he's going to do, a lot of these stocks are going to still continue to go higher, you know?
I think 50% is about the best he's going to do.
50%. It's still a lot.
That's quite a lot.
It's still a lot, you know. The only thing I see he could probably do more is because he owns three parts of the House. He owns the House, the Senate, and the White House. So
I have a slide for you on that. You know, it's not necessarily the Republican sweep that's important. It's Congress. You know, they hold the purse strings. There's a page in the 25 Almanac about, you know, Republican Congress is, you know, it's the greatest combination of Democratic president, Republican Congress. You got a little bit more compromise coming out. You're getting less through. The two houses of Congress are great. It'd be nice if you had a little bit more a majority in the House. I think there's going to be some trouble from you know, the far right, you know, the real
right
fiscal conservatives
too
over
close.
There. Say again?
It's too tight. You
know,
like,
it is. So, but that's going to keep it where we're going to get only the best stuff through, I think.
Right.
So it's definitely pro business. You know, I'm convinced that he's going to disappoint people. Every president does. There's going to be some chop in the first quarter, but I've already got in the Almanac, I put my forecast out for, and we've sort of reaffirmed it recently in the newsletter for about 8 to 12%. Not as big as the last couple of years, but pretty solid, you know, high single, low double digit type of gain for the years with some chop in the first quarter and probably third quarter again, a weak summer period. So, you know, it's not, as you asked, it's not too late to get in. You know, there'll be more opportunities. We're watching the seasonal indicators, you know, Santa Claus, January barometer, January trifecta. We also want to see the Russell confirm. You know, it still hasn't made I haven't looked at in a couple hours this morning. I just did another talk before, but you know, to me, it's kind of like a Dow theory type of thing where, you know, transport's making a new high, confirms the bull market with the industrials. We haven't seen a small cap, you know, the index of Russell new high in over 3 years.
I know.
So that would be confirming of the broadening out of the bull market. But the third years of bull markets are not quite as powerful the first two. So, you know, expect upside, but, you know, more vol. I mean, what, we had one down month in 24? Just April was the only down month, I think, right?
Yep.
I don't think we're going to have as much of a streak in 25, but I still got my bull market hat on.
I think certain industries are going to probably do pretty well. I think certain things are going to take a hit. Certain industries will probably take a while. But you know what, Jeff, with the Almanac, I mean, you've been doing this for such a long time. Have you ever could maybe share with the audience, the listeners, that you probably seen this happen once before, that you've talked about in the Almanac and stuff like that? Have you ever seen something like this happen? Because, like, listen, we've been doing this for so long. I mean, like, we never expected COVID. I mean, like, no. We never, I mean, like, we were talking about, I mean, like, that was like the flu back in it's like the Black Death, you know what I mean? Like, financial crisis. I mean, internet bubble. I mean, it's always going to be a crisis, you know, and crises do make opportunities. But like, never saw COVID. But like, do you ever see something like this as a presidential thing that ever happened in the past?
You mean where a guy who lost comes back and wins?
Yeah.
Yeah, once over Cleveland. And it was back in the, you know, early 20th century, or was it 19, whatever. And it's totally irrelevant. I mean, the world is so different. I mean, it was a different economy. So no, this is unique.
Do you have to change the Almanac at all? Is it still going to follow with the Almanac rules as the past goes? The thing
well, yeah, I mean, it's different, but it's still, you know, a new administration, as you pointed out, very, very wisely, very astutely. But it's also kind of like the fifth year of a presidency. It's kind of like a second term. I mean, it is. He doesn't have another term in him, so it's a second term president. There's some stats on post-election years being weaker. All that data goes back, weaker for Republicans and weaker in general since since World War II, it's been much better. Since 85, it's the best year of the 4-year cycle. There's a few, like usually post-election years are worse for Republicans,
Right.
because they come in and they kick ass and take names right away and take care of things, whereas Democrats are hemming
They
and
cut.
hawing.
Yeah. I always find that Democrats, when they're in office, I always find the stock market always did a little bit better when Republicans in there. But this is the first time I've ever seen the Republicans. I mean, I guess it's a totally different administration. It's not,
Yeah.
as what it looks like, but it's the first time I've ever seen it go up as much because Democrats like to spend money.
Well, they both spend money now. That's why it's kind of evened out. The only real weak point in a 4-year cycle is the midterm year. But it's different, as you said, with you got a guy coming back and winning, but it's still a 4-year cycle. He's still got 2 years to get stuff done before the midterm elections. I think that puts the potential for a bear market in 2026. We'll see what goes on with the Fed and with some of the economic numbers. Economy is resilient. I stop short of saying robust because it's pretty strong. It's no matter where you look. But go on.
So what are the strategies you probably recommend that people should do going into the next, up into the midterms or whatever? You see anything, the Almanac showing that people should, like as previous Almanacs that you've done, that they should be prepared to?
We're going to be repositioning in May. We'll be getting defensive, looking for a better opportunity in the fall. And then, we came into 22 really concerned about heightened volatility in the bear market. I think from where I can look, where I'm standing right now, looking out, 18 months, 18 months, I suspect we're going to have some issues in 2026 again. Unless something, exogenous goes wrong or systemic goes wrong in the market between now and then. But the strategies are, best 6 months, best 8 months, trade the sectors, look for these weak points in the calendar that line up technically and fundamentally, like here in early December that we're talking about, where it's a historic, an annual time to get back in. I think this is the trade here. We have our free lunch menu of stocks coming out. Just the triple witching day. I guess it's quadruple witching now.
Yeah.
The Friday before Christmas. I still
a lot of stuff expiring. Was it? It's.
Are you seeing any action in single stock futures? I have
Friday the 13th out of all numbers.
Right.
Friday the 13th. Make sure you carry your garlic.
So we'll be looking for stocks making new lows on that day to get in there. But this sell-off here is better because that little strategy does better when we get a bit of a correction, which I think we're kind of having here. So biotech looks good, when they announce.
That's what I was going to ask you, Jeff. Like, what industries you think? Because I think the honeymoon's going to end. Listen, we always work as traders, buy on rumors, sell on news, right? So the news is out. He's not in office yet, other than I think it was still in buy on rumor until the news comes out. And I think you're going to probably get a lot of. You're going to get. You're not going to see this. I don't think you're going to. This ain't going to continue to go up this way. I mean, we went up a lot. You know what I mean? Like
huge November.
Huge
November.
It
doesn't mean it's over. It means that, gains beget gains. It'll probably continue, but not at that magnitude.
Yeah, like you make 30% in 1 month. If you can make 30% over the course of the year, it's not going to be as sexy and fun, but it's a lot better than 5% in the bank, anything else. So how do you think everyone should prepare? I mean, you have Grant Brockway. He's one of our students, big gold, silver guy in there.
Yeah, we're out.
What?
We're out of gold.
We're out. You're out of gold?
Seasonal period ended, and we got stopped out of our GLD and GDX positions. We also had Silver Core. Was that the SVM? I think it was the ticker. Stopped out. It was one of our stock picks. So, good morning.
Gold done?
What's that?
The gold's done. Is that going to go any higher?
For this seasonal trade for us, I mean, I'm not, a gold bug. I'm not just holding on to gold forever, but I don't think it's done, like the end of the world done.
Mm-hmm.
But I think the bulk of that trade has happened for this cycle, this seasonal cycle. So that buy the rumor, sell the news, or sell the news, buy the sell off. RFK comes, gets tapped for this position. We'll see what happens, and biotech takes a tank. So
biotech does.
Yeah, it did. We have a recommendation, and I owned the IBB, so I'm looking at it. It's down. I'm like, you know what, man, this is this is a double down here. So I went in, doubled down on the IBB, and here we are, lowered my cost basis, and now it's above there. So there's a kind of how you can position yourself and kind of trade on that if you think something's oversold like that. I don't know if that's a trade that people want to do, but it's working for me. I think I think Bitcoin's got some upside. I'm in IBIT.
I was going to ask you about that. I mean, because I just came back from a conference. I went to the Crossroad conference down in Miami, and it was some of the most unbelievable speakers there. Actually, I'm going to have him on my show. And I had the top AI guy he's going to be on our show, our podcast, from Microsoft. We had one of the top options traders on Bitcoin that was there. But I was going to ask your thoughts on that. I mean, I know you've been so many times, been here. We never really talked about it. I hated Bitcoin in the beginning, but now it's like we're all in.
I'm not saying I'm all in, but I'm in. I did a
no. I mean by like now you got the ETFs in there. You got everybody that's involved.
Yes,
it's not like
the world's all in.
Yeah, right. The whole world's like in there. It's not like you can't get rid of it.
It's not going anywhere.
It's not going anywhere.
I mean, I get concerned about data because I look for patterns and what we can ascertain by the history of it. So the data's gotten better. I think once the future started trading in late 2017, we look at 18 forward, but I was a skeptic for a while. And then
I think everyone else, even me, my son came up to me when Bitcoin was at 500. I thought I was going to shoot him. I'm like, what the hell are you talking about? He's like, I was thinking like he bought a penny stock at $500 back then.
Right.
And then he sold it at like 5,000. He says, Dad, I'm a better trader than you. He goes, I'm like,
financial genius is a rising stock market, son.
You do learn a lot from your kids. You got to tell them.
No, I do. And I talked to my son about crypto. We were looking to get in, and Bitcoin, we were looking to get in at 50. And I said, well, let's wait for the seasonal trade. So I left a couple bucks on the table, but my trade's up like 50%. I got in October.
Did you buy IBIT or you bought? That's what I bought.
IBIT. I traded GBTC last year because I did a white paper on the seasonality of Bitcoin with Adrian Zdunchik, who is a CMT, Poland Big Almanac fan. He's a huge crypto guru. His handle's a crypto burb. He and I are, communicate quite a bit, but he was over in Dubai or somewhere at one of these crypto conferences. But once we put that out, I got in. I eat my own cooking. We saw the seasonal move. It kind of trades like the stocks with about a 4x beta.
Right.
The best 3 months of the year, November, December, January. Bitcoin's kind of October, November, December. Average November gain for Bitcoin's about 41%. It was 39 this past November. So it's just tracking the cycle. It's, a little weak this year, as we came off of 100,000. I think IBIT's interesting. I mean, I'm already in, so I'm not going to chase it here, but it's definitely a trade worth having a look at.
Yeah, Bitcoin hit 100,000. Now it's hovering. I see a lot 97. Of Bitcoins. Yeah, 90, and it's at 95,000. Is about.
It's down a lot today.
Yeah, it's down a lot. There's I see 600 Bitcoins looking to be bought right now at 95,000. That's what I see out there now on the right of the chart. But they're saying they're going to say Bitcoin's going to go to 250,000 at the end of the year. Do you think that you see that happening
by the end of the year next year?
Yeah.
That's a bit much.
I know. And there's one other guy said it's going to 5 million by the next 10 years.
That's not in my wheelhouse. I mean, I could forecast. I mean, I put out a forecast for the Dow back in 2010 for a 500% move to 38,820 by 2025. That happened. That I've got vision on. The Bitcoin, the history is there's 4 halving cycles. It's not exact. They're running out. What's it? 21 million max capped Bitcoin. I mean, the whole supply constraint issue is going to add to it, but I don't have the vision or the visibility on Bitcoin. 250,000, I think is a bit much.
Yeah,
we're still having trouble getting through 100, but I will tell you there's a seasonal move that pops, into the spring, into April, May, that I think we could easily, tack on several tens of more thousands to Bitcoin over the next several months. So there's definitely upside. I don't know about 250, maybe 150 if I'm forced to. If you want me to throw a number out off the top of my head, I could see 150, the 50% move between now and then.
Yeah, I could see. I could probably, like I said, I don't know. I'm a type of person buy on rumors, sell on news. I mean, rumor has it that Trump wants to buy, I don't know, X amount of Bitcoin. He wants to try to make it the new currency before, listen, the U.S. is competing against China, right? At the end of the day, right? We have to make sure we're trying to get ahead of the game. If it's AI, we're to get ahead of the game. If it's cybersecurity, we're trying to get ahead of the game.
Well, we're
If it's
behind on resources, so we better do something.
right, they got to do something. I mean, they basically are almost controlling it, and he's got a lot of catch up to do, and he wants to kind of control this whole market.
I'd like to see us get some rare earths and get some of the things that we need to produce the industrial stuff, whether it be chips or bullets or whatever. We need some other reason. I mean, the problem is we can mine all this stuff out in the Rockies, but the regulations are not allowing us to do it. I mean, we have that stuff in the ground. We're just not pulling it out. So,
well, he wants to he wants to. I'm just telling you right now, Bitcoin's right now testing that 95,000. It's got 600 Bitcoin right now. Just see if it's going to hit it. See if it breaks it. Looks like it wants to break it. But yeah, I agree with you. I mean, that 90% of that. 90% of all that all those minerals do come from China, and it's like they have to deregulate it. We're self-sufficient. We just got a lot of catching up to do. You got to build up all these, all the energy we got to get. I mean, it takes a lot of energy to build that stuff too. But
what do you see technically on Bitcoin? Since we're just talking about it, where do you think people? You're asking me about where people might. When again, where you're a better trader than me. So what
well, I
don't trade as much as you.
I know. I'm looking at the order flow right now, and I'm just seeing a lot of selling coming in right now. It's going to test this 95,000 as like 640 Bitcoin, which is not a lot. I mean, it's a lot.
Interesting how the markets come back though today.
Yeah, where's IBIT? IBIT basically coming down too. It's down to 54.
I mean, is there support at 90? I'm just looking roughly.
What on an IBIT?
On BTC, on Bitcoin.
Is a lot of support at 95. If it breaks
below that.
If it breaks that, you're talking a little bit of 94, but more at 91 and 90. That's where you're basically going. But this
I mean, I think if people want to get in, that aren't, that would be an area.
I mean, honestly, I think it's a good buy here at 95 if it holds here. If it holds. But if it breaks it, then I would say bye-bye. It's going to probably go down to like 91. So, it's up a lot. It's up a lot. Listen, the Christmas, how it works in December. December is a very tricky time. Like you just said earlier, the taxes, people have to get out of their taxes.
Yep.
Want to close out. I mean, they got some huge gains right now. And if you got losses, you got to close them out. So, I mean, you got CPI numbers coming out tomorrow. Last thing people are worried about, and what really sucks, honestly, Christmas and Hanukkah fall on a Wednesday, which totally screws up the whole week.
Wait, and then, like my wife, the New York City, they gave the teachers and everybody off the 23rd, the extra day, right? Because it's like it cuts the whole week in half.
Yeah, it cuts the whole week. So the kids off, what, 2 weeks almost?
Yeah, the kids are off. The teachers are off 2 weeks.
So they're off on the 23rd, on that Monday.
They gave them off. No,
it's 10 days. That whole week. That's going to, it's going to screw up the whole week of trading. I tell everyone this, Jeff, I hate holidays. I mean, we love holidays, but I hate them because it just screws up the market because who's going away the day before, who's coming back the day after. And, like if it's on a Monday, that means everybody's off on Friday. They leave on Thursday. They come back on Tuesday. And that just totally screws things up depending on it. And now you have like this day ends up being on a Wednesday.
I guess you'll have to cook something to calm yourself down a little bit.
I just get upset because I lose the whole week of trading and it just kind of messes things up. I'm like, and it's like everybody wants to take off and whatever.
Make some scampi.
All right. But Jeff, listen, so tell me a little bit more about the book, a little bit about the Almanac. Once you can show me a quick little demonstration, these people here, about how they
show you a couple things here.
I know you've been doing this newsletter. I know you got that Almanac going. You know how to, so maybe you can share and show a little bit of everyone about it.
I'm going to show you a couple things. Am I hitting the share? Let's see. Entire screen. There we go. Here's my phone. I'm going to roll through a few slides. Are we looking at that there?
There we go.
So, the Santayana quote that those who fail to remember the past are condemned to repeat it. I like to say that those who study market history are bound to profit from it. I mean, I just scroll back for right here. I mean, we've been on Wall Street for 58 years. One of the most influential books out there. 150, 1.5 million copies sold over the years. Talking about holiday trading, Santa Claus rally, January barometer, all invented by Yale. Best 6 months. We have our January indicator trifecta. The phrase, if Santa Claus should fail to call, bears may come to Broad and Wall. I think maybe the young folks don't really know what Broad and Wall means. That's the intersection where the New York Stock Exchange is, Wall Street and Broad Street. So I think that's important right here, along with some small caps. So we're looking at our January trifecta coming in last 5 days of the year, first 2 days of the New Year's, the Santa Claus rally. When we have the we hit the trifecta, we get the first 5 days up, the Santa Claus rally up, the full month January barometer up, the year's up 90.6% of the time. That's 29 out of 34 years. So I'm just trying to get through a few things here for you. I mentioned this early December chop, but here's the 4-year cycle that I want to just clue people in on. Basically, you're looking at a very this current cycle, 21 to 24, tracking the election cycle since World War II, tracking it very closely. You see this weakness in the midterm year. The sweet spot of the 4-year cycle was the last quarter of the midterm year and the first 2 of the pre-election year. Uncanny continuing to track in election year. Yeah, we've had a little more amplitude, but still we had a nice rally first quarter, a little softness in the middle. Yeah, we went a little bit higher with the NASDAQ, but here we are just sort of correcting here in this like early December period and set up for year. And this is as of the end of November. Here's our post-election year look at next year. This is right out of the Almanac on page 11. Best year of the cycle since 85. We got the 5th year of the presidency here in the pink line. This is where I think Trump sits. Incumbent party wins. It wasn't really an incumbent party win. Biden, the Democrats lost, but Trump was running again too. So it was kind of like a sitting president running no matter what happened. So we've got our aggregate cycle up here, 12%. That's all years combined with post-election years, combined with the 5th year of decades. Even if you look at the incumbent party loss, line, it's a little bit below there. This is where I get my sort of 8 to 12% gain for 2025. So a little weakness here in Q1. See some maybe disappointments from the Trump administration. Maybe they don't get everything done. Maybe a couple of things they get through have a little pain in the beginning. You got the seasonal weak period here. August, September sets up Q3 for some weakness. And I mentioned this is market charts of election year. It's just, you can see his last 2017 was pretty strong. You can see how much improved the post-election years are since 85. This is a page right out of the Almanac. Again, I had mentioned the post-election years being better for Democrats, but these 3 real negative years back in 57, you had the Cold War, 69, 73 were Vietnam. All 3 had recessions. I don't see any recessionary indications right now with the way the fundamental indicators are lining up and what's going on with the market and the promise of a pro-business administration coming in. And, I think we see some weakness in the midterm year, especially if we get a strong post-election year, like I suspect. Here's the political alignment chart. The page out of the Almanac here is on the left side. The Dow, you can see Democratic president, Republican Congress, 16.4, but Republican Congresses at about 15%, Republican presidencies and Republican Congresses, 13%, 15 for 13 also for S&P, and about 15.6 for NASDAQ. So the political cycle, the political alignment is set up pretty well for next year based upon the solid history. And then I'm going to give you the rundown of the best 6 months. I told you, forget sell in May. You got to buy in October and get your portfolio sober. Here is a chart. Actually, this This black line is what I've added to the logo down here. You can see the orange line in my Stock Traders Almanac logo. That is the Dow's historical pattern from 1950 to 23. I guess I'll have to update that. And I also got that on some swag, on a hat and golf shirt and stuff. But what you can see here, it's not sell in May and go away. It's repositioned. The market goes sideways from May through October generally. People try to refute this pattern. They go way back to the beginning of time. We've got solid data to 1901, but basically in the old days, the first half of the last century, it was a farming agrarian economy where it was kind of buy in May, and you saw sort of a sell around harvest time when the loans were due. So all the business coming into the economy made the market rally. But now it's kind of goes flat and choppy. I have since the 87 crash, 88 to 23 here, showing that even after the circuit breakers and the collars are put in, the market still pretty much tracks this, late October through, late April. Even now with the NASDAQ's influence, we get the best 8 months from NASDAQ, pushing it into June. Okay, can we advance the slide? There we go. David Aronson from the CMT and Baruch College did a study years ago in 2008 in his book, Evidence-Based Technical Analysis, putting all these black box systems, about 6,000, maybe 6,200 different systems through the scientific method, disproving the null hypothesis that the results were not the result of chance and had predictive power. All of them failed. He did the same thing with the best 6-month switching strategy. He started it in 87 after we first published the best 6-month switching strategy in 86 in the 87 Almanac. And it was the only one that was deemed to have predictive power and not be the result of chance. You can see the Dow's average gain, 7.4% November to April, 0.9 May to October. Just a hypothetical $10,000 compounded, a one-time investment from 50 to 24. Up gains of $1.3 million versus a gain of $4,200. Roll in some MACD. There we go. Increases the results. I mean, I'll show you on the chart for NASDAQ in a second, but we use the 817.9 on the buy side because buys are more of an event. It happened kind of quickly. Top's more of a process. Takes a little time to materialize. We use the traditional 1226.9 right out of the inventor, Jerry Appel's playbook. So using MACD increases the November to April gains to 8.9. A little gain becomes a little loss. May to October, nearly triples the results to close to $4 million. And a little gain turns into a loss of about 5,000. NASDAQ, just with MACD going back to 71 when NASDAQ was first started, 13.2% in the best months. And this is November to June, not November to April. I got to fix this slide here, but because it's the best 8 months for NASDAQ. Again, a little loss made July to October. Again, $3.5 million gain in the best months. And this is what a lot of our subscribers use on a regular basis. We put out the signals email. I use it. I'm in it. I bought when we got our signal. And again, a loss from July to October there. So here's a look at the sort of triggers that we had. You got the, sell signal here, the 1226.9 on top, the buy signal down here. We use a spreadsheet, Excel, to just make sure we get the exact crossover. Might have been a little bit early, but such is it. From October 23 to June 25, sell signal, June 25th of this year. 31% gain in the composite between the June sell and the current October 11th buy. NASDAQ gained 3.5%. We're up 6. I think we're off a little bit from when I did this a few days ago, this slide. But that's sort of a look at the technical combination, a combination of technical analysis and the fundamentals. Let's see. I want to show you a few things. Here's the portfolio that we put out for subscribers. This was as of our monthly webinar where we take a lot of Q&A as well that we do once a month at the beginning of the month to go over our analysis. Just doing pretty well. It was up a bit more, and now it's pulled back a little bit. And now I mentioned the the Russell 2000, I think when Fausto and I were chatting earlier, we still haven't broken out. We've come back a little bit here, and there's an updated version of this on the blog, which I didn't throw in here. But if you go to Almanac Trader at Twitter, or just go to stocktradersalmanac.com, you can see this updated chart. We've come down here a bit into mid-December. This is a seasonal pattern chart out of the Almanac, with the Russell 2000 over the Russell 1000, showing the combination of small caps, or the ratio of small caps versus large caps. Used to be called the January effect. Our research shows that it really starts in mid-December. So we've got the year sort of broken up, starting in July. So you can see this bottoming of the small caps versus large caps and start to take off here. We see most of that gain in the first couple of weeks, the last couple of weeks of December, and then into January. The old January effect used to be that small caps outperform large caps in January. Now it really starts in December. So this is set up for a trade here, but I would like to see, it'll be a confirming, indication if and when, which I think it will, the Russell breaks out. So you can see a little bit of this weakness here that we're experiencing right here seasonally. People want to say that it's got a lot to do with what's going on in the world or the market, but it's also a seasonal tendency, a seasonal behavior that we see. Tax loss selling and profit taking push the market down a little bit, but then you can see small caps. Whoops, go back one. Whatever. Let me see if I can get back to that slide there. We can see small caps really take off, outperforming election years. The dotted line up 3.5% with the Russell. And then, we're going to be looking for that Santa Claus rally and January indicators. So just a little run through before I go away and roll it back over to Fausto, that the birth of the Santa Claus rally, January barometer, you can see him here in the 1973 Almanac. Yale's phrase, if Santa Claus should fail to call, bears may come to Broad and Wall. And as January goes for the S&P, so goes the year. And the January indicator trifecta. You take the Santa Claus rally, last 5 days of the year, first two of the new year, not any other Q4 rally that people are talking about. The first 5 days of the year, early warning system, and the full month January barometer. When all three indicators are up, 17.7% average gain, up 29 of 34 years, a 90.6%, batting average. If any of these are down, the gains, the year's results are usually reduced. So it's a little sector seasonal trade. You can see all of our sector seasonalities coming into play. You can see a couple of ending here: semiconductors and telecom, oil. We just sort of picked that up in our ETF sector rotation trades. It doesn't quite go to July as much anymore. It's kind of a December to May trade. And here's some of here's our Bitcoin seasonality chart. Yeah, here's that move. You can see the right scale. We got the 2018 to 2023 on the right scale, along with 24. So you can see this kind of move here. From year end up into May is about a 40% trade. We've done that 40% here in November. Interesting how close this 2024 trade has tracked the full cycle trend of 2011 through 2017. The data we get goes back to about 2010, but here we are correcting a little bit. I know Fausto and I were talking about some levels. 95 looks good, but it's got a hold. If not, it's down here. I guess around 91 or 90 was what Fausto was seeing there. But again, tracking the seasonal trend of Bitcoin worked well for me last year. I'm trading it again. I'm in IBIT. It's up. And then there's a nice little bar chart situation. Just the monthly average performance for Bitcoin. The green and the red is the history. The black is the current year. as average gain 41.4% going back to 2011. This year was up 39%. Had a little more weakness in August this year than September, but still the weaker months. And you can see historic average gains of 12, 13, 14, 9, 10%, 38% over these months. I think the upside for Bitcoin is still there seasonally. The supply is running down. So this dip here is definitely an opportunity if you're in the market for it. Got to use your technicals, and I'll defer to Fausto on the technical buy limit trade there, but I'm in already. I see I see Fausto's face popping up down there.
I know. I'm looking. I see. I'm checking it out.
You like this one?
I like it.
So yeah, this is encouraging for me seasonally for Bitcoin. And then there's the full everyone full in ETFs, futures, the market, the whole world's in. Here's the sector rotation portfolio. I told you about the biotech trade. This is a few days old, but we update this for subscribers. Stock picks. Some of this stuff's been a little choppy here with the tax loss selling and profit taking in December. I said we stopped at a Silver Corp, and then a couple other ones got sold. This one's getting bought out. So you can go to stocktradersalmanac.com. Here's some of the large cap ones, and if you click on, I got an offer for you. Just a little rundown. Some of my headwinds and tailwinds. Valuations are high. Geopolitics. Thank you, Cyber Trading, for putting that in there. Valuations are high, but they can stay high and get higher. Same with sentiment. Geopolitics, I'm concerned about. Yeah, some things are looking like they're going well, but we still got China and Taiwan and Russia out there. Middle East is still hot. I know what's going on in Syria is interesting, but it's still wide open right there, more so than ever. U.S. debt's an issue, but the economy's not really slowing down. Labor's not really softening. Inflation's cooled. I think the Fed has stuck the landing here. I'm expecting a quarter point every quarter. I think we get one here in December, and then one in March, June, September, and then next December, bringing it back to sort of the neutral rate, which is in line with GDP. And it also comes out when they have their economic projections every quarter. So that's kind of what my thought is right now. We still got growth, we still got spending, and all the cycles are tracking, and the forces of the election year and the new administration are there. I'm seeing new highs into year end and also into 2025. Fewer rate cuts than people were thinking. Resilient economy, stable job market, and my best case scenario for 2024 was 15 to 25%. I'm seeing greater than that. I'm seeing potential for 30% year over year for 24, maybe 60 to 100 by the time December's done. I know we're down a bit here, but that's what my look is here. And then if you want, you can. Here's the best offer I have out there. Oh, this is the wrong one. This should be CTU right there. You can use. I had that code for somebody else. But either way, you can go scan that in, jump to the landing page that Fausto put up there, or one of the guys there at the team. And that's it.
All right. Well, Jeff, any last minute predictions you would say before we go?
Predictions. I mean, 8 to 12% for 2025. I don't think the Bitcoin rally's done. I think the market's got legs and we go higher. I think you can use this dip here in December to get in and make a nice swing trade for the seasonal move.
Well, I'm going to hold you up to it.
You got it.
Well, Jeff, thanks so much for coming. We got to have you back, and everyone, welcome for another last episode. We'll see you back. Remember, tomorrow we have the Cyber Expo. We got a bunch of other great speakers are going to be here tomorrow, and we have Michael Cal that's going to be seeing one of Fast Money guys going to be on as a keynote speaker. Look forward to having him, Jeff. You know him pretty well, and we're going to have you back, Jeff. Look forward to it. Listen, you have a Merry Christmas and a happy Hanukkah.
Hanukkah.
Yep, there you go.
Take it easy, everybody.
Bye-bye, everybody.